break that down and really what the market's been doing in the last couple of weeks. PNC Wealth Management Chief Investment Strategist Bill Stone. Bill, what are you watching? We got the GDP number yesterday. I know it's backward looking, but it came in line with expectations, north of 2%. That's good, not?
It is. I mean, it was a good revision. I think I'll say the downside is probably some of that revision was really inventories that'll rob from this quarter. So the net wasn't a ton of improvement, but still okay. I think for me, today you'll probably see, the reports this morning will all look a little bit better than the previous month, probably. I don't think it changes the path that the Fed is on in terms of likely raising in December. I don't think even if something came out under none of those are probably going to shock enough to change that path. I think for me, it's probably next week in terms of watching payrolls that it gets more interesting.
I'm going to ask you this, and it's a very simple question, but I've been asked this repeatedly by everybody, friends, relatives, even strangers. Why the heck is the market going up with Paris under attack? We have a powerful threat in the form of ISIS that we have not addressed yet. They've gotten aggressive. They're able to attack a major city in the world. You have Russia at odds with. We basically have an entire mess in the Middle East and now around the world, and the market still goes up. Why?
Hard to say in any one time. I think what we went back and looked at some of the history of different terror attacks over time, and what you do see is the market generally becomes desensitized to these terror attacks. And in reality, I mean, it's always hard to say this, but there is generally, though the human toll is horrible, the economic toll tends not to be that large, and that's, I think, the differential.
Well, the other factor here is these are happening outside of the United States.
Yeah,
God
true.
forbid something happens in the United States, but that could change the way Americans react to it. But the other thing that I think is going on, Dagen, is we've been spending a year talking about the Fed coming around and finally starting to raise interest rates. I think the market is responding to what's going on in the interest rate and financial front and not on the global front right now. So it looks like the Fed is finally going to start raising rates, but they're going to do it very slowly, very cautiously. And I think there's a little bit of a relief rally coming through the market that we're finally getting over that hurdle and starting to look forward into 2016.
Yep, and to add to that, the market hates uncertainty. So we're getting some sort of certainty coming up now. That's a very positive thing. But remember, Dagen, go back 100 years, the market goes up 3 out of every 4 years, and the average return is roughly 10%. So to see, there are always global issues, and you can say it's different this time, but I would argue it's always different this time. So in general, companies learn to deal with it, and earnings and profits can improve.
I pointed this out a couple weeks ago. Luxury sales in the United States, and I can say this, Barney, and this is locally, but Barney's and Bergdorf Goodman put all of their clothing on sale 40% yesterday before Thanksgiving. Luxury is wretched. Tiffany, you had missed yesterday. It warned. And even in luxury and other parts of Macy's, Nordstrom have been struggling. So what does that speak to in terms of an economy strong enough? I know that it's the higher end, but an economy strong enough that the Fed can start raising interest rates.
I think the hard part, what has just confounded people, is that the consumer is spending. It's just hard to figure out where they're going to spend next. So we know they're buying autos, right? We're probably going to set an all-time record in the number of autos sold in the United States this year.
Right.
We know they're spending on Amazon, online, but every time
autos,
you think
Home Depot, Lowe's, and that's because
high-end people had their moments. Stock prices rose after the crisis. Home prices have been coming back. I'm not crying for people who don't want to shop.
I'm not crying either.
But the point here is that this is the moment for the little guy, right? Because job growth is finally picking up and gas prices are falling. This is a chance for people who want to shop at Walmart or Costco,
Dollar Tree,
and not
Ross,
for the guys,
and
for the people who are shopping at Tiffany's. So I'm sorry, Tiffany, you're going to have to take a break while the rest of the country kicks into a bit of a higher gear. I'm still angry because you said I drink pumpkin spice latte, which we have to talk about.
Your brother immediately texted you about it and said, "What are you doing?" So you got me. You got me back. I'm gonna give Bill the final word,
Yes.
Mike, because you look like you want to say something. Bill, you get the final word.
I think the other thing, just to go back to the terror thing, the one thing that came to mind as well is not that, again, you're not right that if something happens in the U.S., are certain to see a sell-off. But I think the interesting part is maybe some of the connection historically is that a lot of times when you saw an attack, oil prices would really spike up. That is a distinct danger to the global economy because you have just no pressure on oil prices. I think that makes a big difference as well.
So they stay contained even with the greater tariff.
Yeah.
Bill,
It's a huge release valve.
Yeah. Good to see you.
Good to see you. Happy
Bill,
Thanksgiving.
You too. Bill Stone from PNC. Up next.